Every morning, the countdown begins for the markets with meticulous research and analysis designed to help you capitalize on the trading day. Beaming live from the CNBC TV 18 Motilal Oswal studio.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. Tuesday morning, we're coming to you live from the CNBC TV 18 Motilal Oswal studios. I'm Prashant. With me, my colleagues Surabhi and Nigel. Guys, good morning.
Hi, morning.
Hi, morning, folks. Again, the rally continues to roar in different parts of the world. I mean, Wall Street, everyone's talking about the Nasdaq, and in Japan, Nikkei hitting that psychological mark of 40,000. So it's up and away for equities. Hopefully, we participate.
Yeah, let's hope so.
Well, let's just take it from the top then, right? And, in terms of news flow and updates with regards to India, US, there isn't very much. I mean, it's not what happened last night what I want to focus on, but what did not happen. And I think that also is a sort of important indicator. So, that virtual summit, BRICS meeting from yesterday, that took place. So you had President Xi from China, President Putin from Russia, South African leader, all attended remotely. Prime Minister Modi did not attend. There was S. Jaishankar, the External Affairs Minister, who essentially represented Prime Minister Modi in India in that virtual meeting. It's to me, that seems like a bit of a signal. It's like a pragmatic diplomatic move to kind of sort of maintain a balance between, of course, President Trump, with who, Prime Minister Modi exchanged very warm back and forth over the weekend. And of course, at the same time, very much being part of the BRICS as can be seen by the comments which came in from the External Affairs Minister S. Jaishankar, who attended. So that's what I wanted to begin with. I mean, it's not comments from some of the top officials of the Trump administration or this or that. I mean, essentially, this is one more kind of step. I mean, the first overture was made by President Trump with those comments hailing Prime Minister Modi. Prime Minister Modi sort of responded warmly. And then you have this. I mean, this was a long-planned meeting, a virtual meeting, and Prime Minister Modi essentially absent, being represented by the External Affairs Minister, S. Jaishankar. So the recognition is there. Maybe you need to sort of, de-escalate step by step in that sense. A little bit of give and take at the same time. Now, I'll just go to the US markets and where they finally ended. So S&P was up about a quarter. Nasdaq was up about 0.45%. So equity markets doing well. The 10-year yield lost 3 basis points to around 4% or so. Dollar index, sharp move lower. I mean, I think that we were talking about that trend line all the way from the lows of the global financial crisis. We are slightly under it, still around it. 97.4 is where we kind of left off. You had the New York Fed survey. One-year inflation expectations have ticked higher, but it's a record low in workers' confidence. I mean, essentially, if they lost the current job, how confident are they in finding an alternate, a new job? And the answer to that is at a record low. Markets, by the way, fully pricing in a 25 basis point cut now on the 17th of September, which is next Wednesday, which is the FOMC meeting, which is due. Well, will we see at the margin 50? We don't know, but 25, I think one can work with. Oil prices up a little bit, $66 a barrel is where we are at. Now, just tying in the levels, yesterday, of course, once again, for bulls who were hoping for a bit of a strong closing. The opening was strong, a strong closing. I mean, they were in for a disappointment because the market sold off, ending just about 50 points higher in the Nifty. So the breakout above the falling trend line is the same level we put out yesterday as well. Roughly 24,980, 25,000 is a break above this level. Essentially will confirm further upsides in the near term. So keep that in mind. And 24,522 is the low that we saw. And I think as long as the market stays above it, I think hope that the market continues to see some repair and recovery will be there. Bank Nifty support is the low of 53,561. And here, the 20-day moving average, the 40-day exponential moving average, both come up on your screen. 54,772 and 55,177 are those particular levels. So GIFT Nifty gives you a quick sense of how we're likely to start, another 70-odd points higher. So the opening is going to be good. But through the course of the day, will we be able to maintain the gains and build on it is the question, which has been a bit of a problem lately. But F&O stats, how is the setup? Nigel is standing by. Nigel, over to you.
Well, institutional participation actually has been a little bit softish if you look at the gross volumes. However, what's been the trend is the DI is buy, the FI is sell. And net, actually, the institutional numbers are positive. So that, I think, was par for the course. What did the FIs do in the index futures, though? No big short covering is what we saw. They continued to add shorts, but yesterday they added equivalent amount of shorts as well as of long contracts. And in fact, now the short position continues to hold at around 82%. But one positive we have to look at is the way the short positions have getting added by the FIs, and actually they're not getting follow through. So just take a look at that. The short positioning was at around 1.7 lakh contracts. That's holding at around 1.92 lakh contracts. So effectively, the short positioning has moved up by around 20,000 contracts. But if you look at the Nifty, that's not worked in their favor because the Nifty actually is mildly higher. So the FI shorts that are actually getting follow through in that entire pullback from 25,500, we pulled back to around 24,500. Now they're not getting follow through, which in the sense is a positive actually. Market may not go up, but if the shorts get piled into the system and the markets don't move down, then they're going to get stumped on the wrong side. So that's an important data point. But today is a Tuesday. So yet again, we are bracing for the weekly expiry on the Nifty itself. So these strikes become important. 24,900 call, 24,800 call. Good amount of open interest built up out there. And that was writing out there because on these strikes, even when the Nifty moved up, we did see there was erosion of premium. So that's going to be the important marker that you're going to be looking at. Call writers believe they've got this covered on the upside. On the downside, the 24,700 put, that has seen a fair bit of open interest build up and the premiums around 25 rupees. So which brings us to the levels. If we're looking at the levels on the Nifty, resistance going by the options data for the day, 24,950. Downside, 24,600 becomes a support level. But that resistance zone is at around the 24,900 to around 25,000. I say this because that's where a couple of technical indicators come. In the last couple of trading sessions, we have gone to that band and from there we have pulled back. So 24,900 to around 25,000. That will be the important resistance mark you're looking at. The Nifty Bank, the good news is at least in the last couple of days, it's performing in line with the Nifty after underperforming. The 20 DMA is the important mark you're looking at on the upside on the Nifty Bank itself. So that's the mark that you'll want to watch out for on the Nifty Bank. You'll want it to get closer to that mark and hope for a bit of a short covering bounce. That's a good 400-500 points away from current levels. Tech, though, is likely to support because Infosys could hold its ground. So that we'll get some kind of support coming in from there.
Absolutely. Infosys is definitely, in terms of news, definitely the stock of the day in focus, considering it's looking at another buyback. And we'll talk more about that as we go forward. Just a quick glance across Asian screens, mostly higher. The key markets, for instance, Hong Kong up about 1.5%. Japan, like I said, has been roaring. The Nikkei hit the 44,000 handle earlier in trade because the expectation is with political change in Japan, the successor to the Japanese Prime Minister would perhaps be more reform-oriented, would look at more stimulus, and that's been driving the Japanese market. But the other regional markets as well. It's a really good-looking green screen across Asia. Now,